Hello, Assalamu alaikum students. This is your teacher Azka Bhatt, and today we are going to solve the paper. Many students were requested that teacher please solve the IDCSE accounting paper as well. IDCSE accounting paper, May-June 2025. Please solve this paper as well. Yeah, I know that it's been a long time that I was not solving the paper for IDCSE accounting, but I have solved many papers. But yes, for May-June, I haven't solved anyone. So that's why most of the students are waiting for this video. And I was quite busy with my own students because they are going to appear in October, November, and that's why I was not able to make video. Okay, so if you are new to my channel, so please first of all subscribe to my channel, and you will be getting more videos like that. And plus, if you want to enroll into my classes, I am providing the online sessions for very reasonable fee. So if you want to enroll into my classes, so please join. You can text me on my WhatsApp number. So yeah, so let's start with the question number 5. This one. Let's see the first of all requirement. Yeah, as you can see that A requirement, we need to prepare the purchase ledger control account, and that's very easy. This is kind of a liability, and purchase ledger control account will give you a proper amount, that what amount basically you owe to your supplier. And then we need to prepare the income statement, and after that there's a D part, and the C part where we need to find out the trade receivables, and then the D part where we need to advise that uh, whether the Rexford should employ a bookkeeper. We need to write the 2 points against and 2 points for the Rexford, and that's it. Okay. So first of all, we need to prepare the purchase control account. So just remember that whenever any entry will be increasing the liability, you will be recording this on the credit side. And whenever any entry will be decreasing the liability, you will be recording this on the debit side. So yeah. So basically, purchase control account is basically give you the figure for the trade payables. And we know that trade payable is a liability. Okay. So let's find out the opening balance first of all. What is the opening balance? Balance PD. Okay. So as you can see, let's read the question. Rexford is a trader and all his sales and purchases are on credit basis, okay? And he does not keep a full set of accounting records but has provided the following information. We have the assets and liability at the start of the year, and then we have some bank payments at the end of the year, and then we have some additional information. So as you can see that we have the assets fixed and fitting at cost. We have the accumulated depreciation of fixed and fitting. We have the inventory, opening inventory, trade receivable, opening trade receivable, opening insurance prepaid, cash at bank, and trade payables. So this is basically trade payables at the start of the year, and this is what we need to write here. So 5680, we will be writing it here. That is basically your 5680. Okay. And what is the date? Date is 1st January 2024. So this is 2024. And 1 second. 2024, yeah. 1st January. Okay. Hmm. Okay. So as you can see, students here, now we don't have any information regarding the trade payable ledger control account here. Only this was opening balance, and we just completed that. Now, bank payments during the year ended 31st December. Trade payables after deducting cash discount is $380, which is the cash discount which we received from our supplier. And the trade payables which we paid, like this is the paid amount, that is 68,100. So remember that whenever we will get the cash discount from the supplier. So it means that liability has reduced. We don't need to pay this $380. And when we have paid the amount, which is 68,100, so yes, of course, again, the liability decreased. So it means that when the liability is decreasing, we need to record this on a debit side. And when it happened? On 31st December, okay. So first of all, 2024, and then 31st December. Yeah. And let's write the payments first of all. The payments, or you can say maybe the payments or bank, because bank will reduce because of that. We can write the bank as well. Let's write the bank entry. And then the second thing is, 1 second. Yeah. The second thing is the discount received. Discount was, I think, 380, I guess. Yeah, 380. So 380 is basically the discount, oh, sorry, the cash discount. And how much the payment? 68100. Okay. 68100. Okay, so this is payment. Done with this. Okay. Um, After that we have rent and insurance not relevant. General expenses not relevant. Wages not relevant. Wines not relevant. Let's see additional information. The only amounts received during the year to 31st December. Okay, so this is related to trade receivable, and this is not again relatable, like it's not relevant. Markup of 50% is not again relevant. This is information related to depreciation. This is related to inventory, and yeah, the fifth adjustment is related to the trade payables. So they are saying that amount owed to trade payables at 31st December 2024 means that this is the year end, like closing balance was 25% more than the amount owed at 1st January. Okay, so it means that the opening balance, which was 5680, that was the amount which we owed at 1st January. Closing amount is 25% more than this amount. So it means that this amount is basically 100%, and the amount has increased 20, with the 25%. So, okay, so we can multiply this with the 125 or maybe 1.25. Because if we will multiply this with the 125, so we need to divide this with the 100. So the simple thing is that let's divide the 125 with 100, so we will get the 1.25. So let's write the balance, closing balance here, and the amount is 5680. Let me write here 5680 multiply with 1.25. Okay. So let's see how much the amount. Let me calculate. Okay, so this is 7100. Yeah, okay. So that's it. We don't have anything. Um, Now let's find out. I think we need to find out the purchases here. Okay. So this is the heavy side 68,100. Okay, let me add the date as well. The date was 31st December. Yeah. Okay, so it is already written. Okay. Yeah. So let's total this 68,100 plus 380 plus 70,100. So it's equal to um 75,580. Okay, so let me write it here. This is 75,580. And the same thing I'll be writing here. 75,580. Okay. And this is the closing balance, so this will become the opening balance here. In 2025, this will become the opening balance in the next year, January 1st. And this is our opening balance, balance BD, and that is 7,100. Okay, so if you will, once again, what's the problem here? I just forget to write the 7. Yeah. So students, when you will deduct the opening balance from here, so you will get the purchases. So if maybe you know that whenever you will purchase on the carrot basis, so your liability will increase. That's why purchase at a control account will be carrot. So that's why your purchases will be, if you just deduct this 5,680 from 75,580, so your purchases is equal to purchases, that is equal to 69,900. Yeah. Okay. So we just done with that. Hmm. Now we need to prepare the income statement. So students, in the income statement, first of all, we will write the revenue, and we don't know that what is the revenue because we have seen in the whole information, there is no information regarding revenue. Then we have to deduct the cost of sales. So the cost of sales is equal to opening inventory. Let's see, do we have the opening inventory? Yeah, as we can see, this is the balances of 1st January in opening year. So this is the opening inventory, this is $66,000. Next, we need to write the purchases, which we just find, and how much it is. It is 69,900. Then we need to deduct the closing inventory. Let's see how much the closing inventory. If we can see in the additional information that inventory at 31st December was valued, means the closing inventory at $400 more than the inventory at 1st January. Okay, so it means that whatever the inventory, opening inventory, 4,400, you can, the ending inventory is more than 400 of the opening inventory. So it means that if the opening inventory is 6,000, so it will be 6,400. And this is what we need to deduct. 6,400. Okay, one second. Yeah. So now what is the answer? Let's see. The cost of sales, opening inventory plus purchases and minus closing inventory. So this is equal to 69,500. Okay, so the cost of sale. Okay. So for finding out the gross profit, first of all, we have to know that what is the answer of the revenue. So if you can see here that Rexford applies a markup of 50%. So what does it mean? It means that whatever the GP we have, this is a 50% of the cost of sales. It means that if I will multiply this cost of sale with the 50%, so I'll get the GP. Okay, so let's multiply then. Let me write it here. This is 69,500 and multiply with the 50%. Okay. So 69,500 multiply 50 divided by 100. So this is equal to 34,750. Okay, so let's write the gross profit here. 34,000 and 750. That is gross profit. Okay. Now, with the help of GP and cost of sales, we can easily find out the revenue. Okay. So, how we can find out the revenue? If we want to find out the GP, so what we need to do? Cost of sales minus revenue. Now, since we want to find out the revenue, so we will be doing the reverse working. We need to add the cost of sale into the revenue. Now we will be adding the GP with the cost of sales, and then we will get the revenue. Okay, so if you will add 34750 plus 69500, let me add this as well. 69500 plus 34750. This is equal to 1,04,250. Okay, so this is the revenue. 1,04,250. Okay, so that's the revenue. Hmm. Let me put 1 second. What happened? Why it is not charging? Yeah. Let me. Yeah. We need to put the back bracket inside so that. Yeah. So after the gross profit, we have to add the other income. So let's see. Do we have the other income in the question? Hmm. Yeah. We have the other income. That is the cash discount is 380. We need to add this into the income statement. This discount to see which is 380. We need to add this. Discount received, and that is 380. Now it is equal to 34750 plus 380, so this is equal to 35,130. 35,130. Okay, so done. Next, we are going to see the expenses. Minus expenses. Let's see how many expenses we have. As you can see that we have the insurance prepaid at the start of the year, which is 300. Okay, so that is a prepaid at the start of the year. It means that till end, like till the end of the year, it already expired. You already have used that. So that's why $300 will be the part of expenses. And then we have one more rental insurance, and that is 10120. And I guess there is no adjustment regarding, yeah, there is no adjustment. So let's add these two. The rent and insurance. Okay, so that was 10120 and then add, which is 300. Okay, so this is equal to 10,420. Okay, let's see the next expenses. Okay, so whenever you are just, looking for the expenses, just look at the payments. As you can see that we have the journal expenses, which is 4,730, but I don't think so that there is any adjustment. So these are the journal expenses. So the journal expenses is equal to 4,730. Okay. Next, Let's see the next. Yeah, wages. As you can see that we have paid the wages as well. This is also the part of expenses, 6,400. So we will be writing it here. There is no adjustment regarding the wages as well. 6,400. Okay. Then we have only depreciation left, I guess. Yeah, only depreciation left. So if you see that they're saying that regarding depreciation, there's only one information. Depreciation is charged at 20% using the SLM. Okay. So how many assets we have? As you can see that we have the fixture and fitting only. So, and this is the depreciation. This is the total depreciation till now. But since they are asking about to find out a depreciation with the help of straight line method, so we will simply multiply this 28,000 with the straight line method, which is 20%. Okay. Depreciation on fixtures. Oh, okay. So the cost was 28,000. Multiply 20%. So 28,000 multiplied by 20 divided by 100. So it will be equal to 5,600. Okay, and then we will be adding all the expenses and deducting it from the total of discount received in GP, which is 35,180. Sorry, 130. 35,130 minus this, minus this, minus this, minus this. So, or maybe like we can, first of all, let's count all the expenses. 10420 plus 4730 plus 6400 plus 5600. So this is equal to 27,150. And we need to deduct that amount from this 35,130. So we will get the profit or loss for the year. So the answer is in the positive form. This is 7980. So 7980 basically your profit for the year. Seven nine eight zero. Okay, done. Done with the income statement. Okay, now see the next question, C part. Okay, so in the C part, we need to calculate the trade receivables. So trade receivable is basically the asset for the company. So if maybe you remember that, one second, that whenever you will be making the trade receivable account, so whenever something will increase, you will be debiting it. And whenever something, like because of any transaction, if the trade receivable is decreasing, you will be crediting it. Okay. So let's see. First of all, we have the opening trade receivable. As you can see, this is the 1st January 2024 assets and liability balances. So we have the trade receivable at the start. That is 21750. This is the opening one. Okay. So it means that this it should be right here on the debit side. So this is 21750. Okay. Basically, we need to find out the ending year trade receivable. Okay, 31st December. Uh let's see the next information. Mm, okay, so okay, so this one is related to the only amounts received during the year to 31st December 2024 were 103,200 from trade receivable. Okay, so these are the payments which we received. So whenever we receive the payments, so just remember we need to credit the trade receivable. Why? Because It we already received that amount. Now the customer, they don't need to pay us again. So that is 103 minus 200. So we need to write it from the credit side. That's why let's minus this. Because at the end we will be deducting the credit side from the debit side. So that will be 103,200. Okay. And then if you can see that here, they are saying that Dexford is a trader, all his sales and purchase are on the credit. So it means that all the credit sale is this basically, this revenue. This is the credit sales. And we know that whenever there will be credit sales, so we will be writing it on the debit side. So that's why we will be adding it. And that is 104,250. Okay. And after that, when you will get the answer, that will be the closing balance of the trade receivable. So this is 228 triple 00. Yeah, done. Next part. D part. Ooh. Okay. So let's see the D part now. Let's discuss this. Advise the Rexford whether or not he should employ a bookkeeper. Justify your answer by providing 2 points for and 2 points against employing a part-time bookkeeper. And this information is related to that. Rexford is considering employing a part-time bookkeeper. Bookkeeper would be paid 5,000 per annum. Okay. So, mm, of course, if he will be employing a bookkeeper, so it means that the Rexford will be having extra time to spend on the other tasks. So if Rexford will hire the bookkeeper, if Rexford will hire the bookkeeper, so he will be having more time to for the other task. He will be having more time for the other tasks. However, expenses will increase since Rexford has to pay 5,000 per annum to bookkeeper. Next point, we can say that there will be more accurate records and less errors if he will employ the bookkeeper. Sorry, yeah, a part-time bookkeeper. So, mm, Rexford will have the more reliable records if he will hire the bookkeeper. Okay, and however, The bookkeeper will not prepare the financial statements. Will not prepare the financial statements because this is not the responsibility of the bookkeeper. And at the end, you can write a recommendation that what he should do, and that's it. Okay. So let's see the next question. This one. Yeah. Question number 4. Bilal prepared a trial balance at 31st December 2024. Okay. And Bilal later discovered the following errors. First of all, goods taken for Bilal own use, costing 185, had been recorded as a cash drawing. Okay. So basically, we deducted the cash mistakenly. So here, what we need to do, what we should do basically, we should credit the purchases and debit the drawings. So here, the drawing, there is nothing wrong with the drawings. So it means that now we need to increase the cash and decrease the purchases. Okay. So it's very easy. The error number 1. Let me write it here. This is error number 1. And first of all, we have to debit the cash and we need to credit the purchases. Okay. So that was equal to 185. Mm, 185. Okay. Let's see the next error. That motor expenses um $63 paid by bank transfer had been recorded as 36. Okay, so what happened here? This is the book original entry error. Error of original entry. So here what we have to do, okay. Motor expenses $63 paid by bank transfer. So motor expenses should be debited and bank should be credited with 63. But what we have did, we have recorded it as 36. So we understated the we understated the bank and we understated the motor expenses. With how much amount? If we will deduct 63 from 36, so the amount will be 27. So now let's add this 27 now. So motor expenses will be debit. Motor expenses will be debit with $27 and the bank will be credit with the $27. Yes. And this is the error number 2. Yeah. Now let's make a space for error number 3. Okay. So the error number 3, capital reduced by Bilal 2000, okay, had been credited to the bank loan account. So we mistakenly increased the liability. Bank loan is a liability. So it means that what we will do here, now we will decrease the bank loan account with debiting it and we will credit the capital account with the crediting it because capital nature is credit. So the bank loan will be equal to 2000 and then the capital will be credited. Okay. Uh, Now we are just looking for the fourth error. A purchase invoice, $84 from Maya. Okay. Had been debited to the account of Moira and credited to the purchaser's account. Okay. So basically, purchaser's account should be debit. And we receive the purchase invoice from Maya, so it means that Maya is the supplier, and Moira is also a supplier. So what we have to do, we have to debit the purchases and we should credit the Maya. So now the mistake is that we uh debited the Moira instead of Maya. So it means that first of all now, sorry, we should credit the Maya and we should debit the purchase account. But what we did, we debited to the Moira account. Moira is also one of the trade payables. She is the customer, she is the supplier, and we decreased her by debiting her. So that is why we will be increasing her with the credit. It means that 84 Moira credit and Maya again we have to credit because we haven't credited it first. So that's why Maya credit, Moira debit. Sorry, Moira credit and the Maya credit. And then the purchases, it will be like increasing with the double amount, 84 plus 84. So that will be debit. Purchases, that is 168. Moira and Maya. So these both will be carried with $84. Yeah. And now let's discuss about the fifth error. Bilal's private insurance, $130, had been recorded as business insurance. Okay, so that was the Bilal's private insurance. So that is basically drawings. So we recorded this as a business insurance. It means that we increase the business expenses by debiting it. But what we should have we should have done the drawings debit. Okay, but what we have did, we debited the business insurance expense. So it means that now we need to decrease the business insurance expense by crediting it, and drawings will be debited with $130. So this is equal to drawings. That's $130. And then we have the insurance, $130. Okay, done with the errors. Now let's see the next B part. Okay, so they are saying balance on the capital account at 1st January 2024 was 6,200. Okay, before correcting the errors, original profit for the year was 12930 and drawings were 11,260. Okay, so what we have to do, they are saying that calculate the Bilal's profit for the year after correcting error 1 to 5. Okay, so let's see. Okay, so as you can see, students, if you see the first error, goods taken for Bilal's own use costing 185 had been recorded as cash drawings. And that is 185. Okay. So basically what we have did, we when we okay, after rectifying this, one second. Okay, after correcting. It's also really important that whether they are asking before correction or after correction. Okay, so basically after correction, what we have did, we took the goods for Bilal's own use, and this is 185, and we had recorded as cash drawings. So we know that if 185 is basically the part of your drawings, and now we have to add it back because we have deducted this before. Now we have to add it back 185. So it means that it will be increasing the profit for the year. So this is error 1, 185. Now let's see the next error. Motor expenses 63 paid by bank transfer had been recorded as 36. Okay, so basically the difference was 27, and now we decrease the motor expenses. Sorry, we increase the motor expenses by debiting it with $27. So it means that the expenses will be decreasing the profit. That's why we will be decreasing the 27 from here. This is error 2. Now let's see the error 3. Capital introduced by Bilal 2000 had been credited to the bank loan account. So since capital and bank account, these two things are related to the statement of financial position, because even if it is liability or the capital, we will be writing it into the statement of financial position. It's not having any connection with the income statement. So that's why error 3 we will not record. Let's see the error 4. That a purchase invoice $84 from Maya had been debited to the account for Moira and credited to the purchases account. So basically, if you can see here, so purchases are increasing with $168. So if the purchases are increasing, so we know that purchases is the part of cost of sales. And we used to decrease the cost of sales from the revenue. So it means that if we need to decrease the cost of sales and purchases are increasing the cost of sales, so it means that our profit will also decrease with the $168. So this is error 4, and we will be deducting the 168 from here. Okay. Now let's see the next error. Okay, so as you can see that the fifth error here, we are debiting the drawings and we are crediting the insurance. Okay, so it means that insurance expense is decreasing. So if the expenses are decreasing, so it means that the profit for the year will increase. That's why we will be adding it back $130 into the profit. Okay, so draft profit for the year after correcting errors. That is 13,050. Okay. Now we need to prepare the calculate the balance on the capital account. Okay. So balance on the capital account at 31st, 1st January 24 is 6,200. Okay. Then we need to add the profit. Okay. So let's add the profit. Draft profit. Is this like that you're preparing the section of the statement of financial position? This is 13050. And then we have to, as you can see here in this case, yeah. Uh, 1 second here. Yeah, we have introduced the capital again, $2,000. So that's why this is a gap introduced. We have to add it. Just 2,000. Okay. And we need to deduct the drawings. Okay, so let's see. Do we have the drawings, which is 11,260, as you can see, 11,260. And we have this drawing as well, 130 cash drawings. So 11,260 plus 130. Let me write it here. That is 11,260 plus 130. So it's equal to 11,390. Okay, now the capital at 31st December 2024 will be equal to uh 9860. Okay, done. Okay, so this question done. Okay, so let's see question number 3. Jasmine owns a consulting business. At 1st April 2024, Jasmine's ledger accounts included the following balances. So we have the motor vehicle cost, its provision, uh, trade receivables, provision for doubtful debt, rent prepaid, and rent rates unpaid. Okay. And during the year end 31st March 25, Jasmine's bank payments include the following amounts. We have purchased one motor vehicle, then we have paid the amount for rent and rates, and then there is some additional information. What we need to do here, we need to prepare the provision for depreciation account. Okay. So first of all, we have to write the opening provision. As you can see that the opening provision is 7,000. So let me write it. Okay. So that is 1st April 2024. Okay. This is 2024 and 1st April. And balance BD. The opening balance is equal to 7,000. Okay. Then we have to find out the current depreciation. Let's see what is the depreciation method. Mm, Depreciation is to be provided at 25% per annum using the reducing balance method. A full year depreciation is to be charged on the vehicle purchased during the year. Okay. So if you can see that we have purchased this motor vehicle and its cost is 80,000. Okay, so at the start of the year, of course, we will be multiplying this with the 25%. So multiply 25%. Let me find out the answer. 18,000. 1 second. 18,000 multiply 25% divided by 100. This is equal to 4,500. Okay, so if the one of this, like we will be including this into the income statement. Okay, so this is the yearly depreciation. Then we have this motor vehicles, and since we are charging reduced, we are using our RBM, so we need to apply the depreciation rate on the net book value. So this is the motor vehicle cost. This is the provision for depreciation. Let's deduct this to find out the net book value. Okay, so this is equal to cost minus AD, means accumulated depreciation, and BV is equal to cost is 16,000 and minus depreciation is 7,000 till now. So how much it is? 16,000 minus 7,000. This is equal to 9,000. Okay. So NBV is equal to 9,000. Now we will be multiplying this with the 20. Let's multiply 25%. Okay. So let's see that what will be the depreciation for the year. 9,000. 9,000 multiply 25 divided by 100. So this is equal to 2250. 2250. But as you can see that we have this depreciation as well. So we will be including that. Including that 4,500. So the total depreciation for both motor vehicles for the year, total depreciation. So that will be equal to 4,500 plus 2250. So this will be equal to 6,750. 6,750. Okay, so let's write it here. This is the year end, which is 2025, 31st March. Income statement. Six, 750. Okay, done. Okay. Mm, so there is nothing on the credit side because I think we haven't sold any asset. Yeah, we haven't sold. So 7,000 plus 6,750, this is equal to 13,000. 1 second. 13,750. Let's write it here as well. 13,750. So the closing balance will be the closing balance on 31st March 2025. 2025 and 31st March. The closing balance will be same. 13,750, and that will become the opening balance in the next year. And next year will be 2025, 1st March. Sorry, 1st April. After 30 March, this is 1st April. So balance BD will be equal to 13,750. Okay, done. Let's see next question. B part. Prepare the provision for doubtful debts account for the year ended 31st March 2025. Balance the account and bring down the balance. Okay. This is a provision for doubtful debts. So let's see, do we have any early provision? Yeah, as you can see. 1st April 2024, we have the balance BD in the provision for doubtful debts, that is 366. So let's write it here. 2024 April 1st, balance BD, and that is 366. Okay. And hmm, okay, so we have this information. They're saying that the trade receivable 31st March 2025 were 11,800. An amount of 300 is still to be written off as a recoverable, and the provision for doubtful debt is to be maintained at 3% of the net trade receivable. Okay, so first of all, we need to find out the net trade receivable. So 11,800 minus 300 is will be equal to 11,500. Then multiply 11,500 with the 3%. 3 divided by 100. So we have the provision for the year end, because this is information for the year end, which is 345. If you just multiply this, so it will be 345. So it means that the 345 is basically the provision at the closing year. So this is 345. Okay. And now how much, as you can see that the provision has decreased. The opening provision was 366, now it is 345. So if the provision has decreased, so we need to debit the provision for doubtful debt account and credit the income statement, because this is known as decrease in provision and that will be the part of your income. Oh, okay, yeah. So difference is 366 minus 345. So with how much it has decreased? 21. So provision will be debit because it's decreased, and the income statement will be credit. So this 121, 2025, 31st March, because we prepared the income statement at the year end. That's why. Okay. And this will be become the opening balance. The next year will be 2025 and April 1st. And that is opening balance, which is 345. Okay, done. Let's see the next one. Prepare the rates and rent and rates account for the year end. Okay. Balance the amount. Okay, so this is basically the expense account. So for this, we will be using the mnemonic, which is P A A P. What does it mean? If the balance is prepaid at the start of the year, we will be writing it here. And if the at starting of the balance, if it is accrued, we will be writing it here. Closing balance accrued, we will be writing it here. Closing balance prepaid, we will be writing it here. Okay, let's see. As you can see that we have the rent prepaid, which is $900, and we have the rates unpaid. This is a prepaid. It means this is a prepaid expense. This is rates unpaid, means that this is the accrued expense. Okay. So it means that we have two balances at the start. We have the prepaid balance, prepaid expense, and accrued expense as well. Okay, so let's write it here. This is 2024, April 1st. And that's balance BD. And the same thing we will be doing here. 2024 and April 1st and balance BD. So the prepaid expense for the rent rate and rents, that was 900, and for the rates which is accrued, it means that we haven't paid this yet, and that is 270. Okay. Done with this. Now let's see. During the year ended 31st March 25, Jasmine's bank payments include the following amounts. Okay, so we have paid during the year, which is for the rent and rate, that is 14,960. So entry will be bank credit and expense debit. So this is the expense account. So this will be debit and bank credit. So we will be writing the bank entry here. And it happened on the year end, 2025, 31st March, the bank entry. So this is 14,960. Okay, done. Now let's see. Okay, then done. If you see that we have the additional information regarding this, that at 31st March 2025, prepaid rent was 925 and unpaid rates were 185. Okay, so this is the prepaid rent, this is the prepaid expense, and this is the accrued expense. So if you see that if the expense is prepaid, so we will be writing it here. If it is accrued, we will be writing it here. The closing balances. So the balance CD, okay, so here the balance CD. That's equal to 925. And here the accrued balance CD, and that was 185. Okay. So let's calculate. So basically the debit side is a heavy side. So the total of this side will be, 1 second, let me just, yeah. So the total of this side, the debit side, this is equal to 16,045. So let me write it here. 16,045, and we will be writing it same here. 16,045. And then deduct the 925 and 270 from here. So the difference is 14,850. So this will be the part of income statement at the year end. March 31st. We have to transfer this balance in the income statement because this is the total expense during the year, and that is 14,850. Okay. So now we will be shifting this, like this closing balance will become the opening balance here as prepaid, and this closing balance will become the accrued balance here as a opening balance. Yeah, so let's write it here. Balance BD, that is 925, and here again the balance BD, that is 185, and the date will be April 1st. April 1st. Okay. Done with this account. Now at 31st March 25, the Jasmine had a bank overdraft, which is this. Prepare the current assets section of the Jasmine statement of financial operation. Okay, so only current assets. So in the current asset, first of all, we have the trade receivables. What was the net trade receivable? Let me see. The net trade receivable was 11,500. Why? Because the total trade receivable was, one second. Yeah, that is 11,800 and 300 was the bad debts. So the remaining the net trade receivable was 11,500 and we need to deduct the provision. The current provision is 345. So 11,500 minus 345. 11,500 and we will be deducting the less provision for doubtful debts. And that was 345. Okay, so the total will be, let me write it here, 11,000 minus 345. So this will be equal to 11,155. Okay, and then if you can see here at the year end, this one, prepaid rent was 925 and unpaid rates were 185. It means that at the year there are still some rates you haven't paid, that is 185. So this will be basically your liability. But this prepaid rent, it means that at the end of the year, which is 31st March 2025, you have paid the extra amount for the rent. That is 925. And we know that the extra amount we have paid, this is the part of the current assets. So we will be writing it here as other receivables. And that's equal to 925. So the total of the current assets will be 11,155 plus 925. So this will become 12,080. Yeah, done. How the principle of consistency is applied when charging the depreciation. So consistency applied, we have different methods to charge the depreciation, reducing balance method and straight line method, revaluation method. So consistency is this, that whenever you have selected one or method for depreciation, so you have to be consistent with that. So that's why it's following the consistency concept. So depreciation is charged using the same method each year. One way Jasmine may reduce the possibility of irrecoverable debts. Okay, so if maybe she will be sending the statement of account to the customers, if she will send the statement of account to the customers so that they should remember that how much they need to pay. Statement of account, I hope that you guys know. This is the type of document which uh, having the summary of all of the transactions. So if she will send a statement of account promptly. Okay. Which accounting principle Jasmine is applying by making investment for the rent prepaid? Okay, so rent prepaid is means that when the rent is prepaid, you have paid the rent already, like for the upcoming months already, for the upcoming year. So we have to deduct that. Why? Because we have to match, because whatever the amount we are writing in the expenses, for the rent, so it should match with the revenue. So that's why the expenses, the amount which we have paid for the next year, it should not be included in this year expenses, because we just want to match the expenses with the revenue, that whatever the revenue we have earned, these expenses basically played a part. So since this is the prepaid rent, it's not relevant to this year. It will be using in the next year. That's why it's not relevant to, it's not having any part to earn that revenue. So that's why we are following, like Desmond is following the matching concept. Okay. So that's it. It is completed. Okay, we have to prepare here the appropriation account. Okay. Do we have profit? Let's see. Farah and Salma are sisters, okay, and who trade as a partnership, and the partnership agreement provides for the following. Okay, so interest on capital on of 22% per annum, interest on drawing is this, salary to this, residual profit. Okay, yeah. So we have the profit for the year, which is 38,175. So let's write it first of all. Profit for the year. That's equal to 38,175. Okay. Now we need to add the interest on drawings here. Okay, so let's see. Uh-huh. Interest on drawing is 4%. How much are drawings? Yeah, as you can see this one. Drawings for the year ended 28 Feb 2025. Farah drawn from bank on 31st December 24 is this. Salma drawn from bank, which is this 14,250, equal drawings basically. Goods taken for own use on 31st August 2025 to 24, which is 5,750. Okay, so let's find out 14,250 for Farah. Okay, so Farah 14,250. Okay, so let's multiply this with the how much? No, sorry. Yeah, zero. Multiply. How much it was? The percentage? 4%. Okay. Multiply 4%. Let me just find it out, find out the answer. 14250 multiply 4 divided by 100. One second. 14250 multiply 4 divided by 100. This is equal to, one second, there is something wrong. Um, Interest on drawing, profit for the year, capital account, current account, and then drawn account from the, okay, so this is equal to 14,250. Okay, so students, as you can see that we just missed one part, that drawings for the year ended 28 Feb to 25. So as you can see that the year is ending on this, like 28 February 2025. But these drawings are Farah withdraw the amount on 31st December 2024. So it means that if you just calculate the year months, so after December there's only 2 months left. in the ending year, which is January and February. So it means that we will be this 14,250, which they withdrawn from the bank on 31st and 24. So we will be adding the drawings for only 2 months because and year is ending on 28th February 2025. So that's why let's calculate this. So this is 14,250. Okay, and we will be multiplying this with the 4%. Okay, so the answer was, I guess, 1 second, let me see. The answer was 570. Okay, so 570 and multiply the 2 divided by the 12, which is total years, like total months in the year. So this will be equal to 570 multiply 2 divided by 12. That's it is equal to 95. So we will be writing the Farah's drawing. I think Farah or Salma? Farah. Okay. So the Farah's drawing is equal to 95. Okay. And then let's see the next one. So Salma drawn from the bank on the same date, 14,250. So it means that her drawing as well, this will be equal to 95, but she withdraws some goods as well, 5750. So we have to, and she taken the goods on 31st August. So if it is count the months, so this will be like September, October, November, like you can count on your finger. September, October, November, December, January, and February. So it is equal to 6 months. So that's why we will be 5750 multiply 4%. Okay, and then what is the answer? Let me see first of all. So 5750 multiply 4 divided by 100. This is equal to 230. Now you will be multiplying this with the 6 and dividing this with the 12. So 230 multiply 6 divided by 12. This is equal to 115. So if you just add 115 and with the 95, so how much it will be? 115 plus 95. This is equal to 210. So Salma's drawings are equal to 210. Farah 95 and Salma 210. Okay, done. Let me just remove this. Okay. Then we need to deduct the interest on capital. Less. First of all, let's add it. That will be easier for us. 38,175 plus 95 plus 210. So this is equal to 38,480. Okay. Now we need to deduct the interest on capital. For the Farah and for the Salma. Let's see. Okay. So the interest rate on the capital is 2% per annum. And how much the capital is? 52,000 and 75,000. Let me calculate. The interest on capital is 2%. Okay. 52,000 multiplied 2 divided by 100. This is equal to 1040. This is equal to 1040. For Farah, if you will just uh second. The capital was 52,000 multiplied 2%. Okay. 52,000 multiply 2%. So it is equal to 1040. Okay. And for the Salma's capital account is 75,000 multiplied 2%. Okay. So 75,000 and multiply 2%. Okay. 75,000 multiply 2%. Okay, let me see. 75,000 multiply 2 divided by 100. This is equal to 1,500. Okay. 1,500. Okay. Then we need to deduct the salary as well. If there is any salary. So we have to deduct this. Let's see. So yeah, so there is a salary to Farah which is 11,200 per annum. So we need to deduct this as well. Salary to Farah. That is 11,200. Okay. And let's see that how much now minus, okay. 38,480 minus 1040 minus 1,500 minus 11,200. So the total which I get, that is which we can say that residual profit, that is 24,740. Now we need to sh share between the both partners. Profit share. Profit share of Farah and Salma. Okay. So if we can see, let's see that how much the percentage for the profit. Yeah. So Farah, it is 30%. To Salma, it is 70. Okay. So 24,740 multiply, that was, I guess, 30%. Yeah. 30%. And that's equal to 7,420, 422, 22. 7,422. And then for the Salma, 24,740, okay, multiply 70%. So this is equal to 17318. 17318. And the total is again the same, 24,740. Okay. That's it. We just done with the appropriation account. Next question, we need to prepare a current account for Farah only. So let's see that what was the total opening balance in the current account. As you can see that Farah is having credit balance, which is the positive balance 3450. So let's write it here. And since this is the year end is 28 Feb, so the year start will be 2024 March 1st. March 1st. And the opening balance BD is equal to 3450. Okay. Then we need to write all the gains, the salary, the interest on capital, share of profit on the credit side, and drawings and interest on drawings on the debit side. Okay. So yeah. So here we have, okay, so interest on capital for the FARA that was 1040, and salary also given to the FARA that was 11,200, and share of profit was 7422. So we need to write everything here, and that was about the year end 2025 Fab 28. So interest on capital, and then we have the next thing that is salary, and then we have the profit share. Okay, so interest on capital was 1040, and the salary was 11,200, and the profit share was 7422. Okay, now let's fill this side. 2025 Fab 8. Fab 28, sorry. Yeah. So let's write the drawings first. Drawings. How much the drawings of Farah? As you can see, the Farah's drawing was 14,250. Okay. Let's write it here. 14,250. And then interest on drawing. Interest on drawings was, I guess, 95 of Farah. Yeah, 95. 95. Okay. Now we need to balance this. So the credit side is a heavier side, and let's add it 3450 plus 1040 plus 11,200 plus 7422. So this is equal to 23,112. 23,112. And deduct the debit side for 14250 and 95. So the closing balance CD. The closing balance is equal to 8,767. And then this will become the opening balance at March 1st, the new month of the year. Balance BD, and that's equal to 8767. So done with this. Next question, C part. That state 2 reasons why Salma should not take more drawings. Okay. So it means that of course it will be reduces if she will be taking drawings, so it will be reduces the liquidity of the business, means that the business cash will reduce. Liquidity of business. And the second reason could be that Salma has to pay more interest. Salma has to pay high interest on drawings. Because the drawings will bigger, so the percentage automatically, like the drawings will be bigger. So of course, if you will be multiplying even the smallest percentage with the larger amount, so of course the answer will be great. Next question we have, let's discuss this. Farah and Salma would like to expand the business and they have decided to convert the business to a limited company. And they are considering selling 30% of the ordinary share capital of the new company to each of their two brothers. Okay. And the brothers would become directors and would manage the business. Farah and each brother would receive a salary 15,000 each year. Advise Farah and Salma whether or not they should make the above changes. Justify your answer with advantages and disadvantages of them to them making these changes. So the first of all advantage will be that if they will become the private limited company, so it will be more easy for them to raise the capital. However, Farah and Salma will be losing control because when two brothers will come, so they will be parting, they will be taking decision and the business decision. They will be taking the part in the business decision making. The other benefit we could write that it will be like the next benefit we can say that maybe the responsibility will be shared if they will become the private limited company with the help of two brothers of Farah. Whereas maybe we can say that the disadvantage could be that um however maybe like their brothers doesn't have any experience, so they will be taking share only, but they will not be giving any kind of quality, time or the quality experience to the business. So at the end, you can make one recommendation on the basis of any advantage. So yeah, that's it. Like because the video is very long, and I think that this kind of questions the students can already like they can easily solve it because these are the theoretical questions. So I think we should discuss the cash book because okay, so let's discuss the cash book now. Or we have to maybe like 1 second. Okay, so I hope that you can read it. Or you can maybe open the 1 second. Yeah. Or maybe we can do one more thing. 1 second. Yeah, okay. So what we can do is we can prepare the cash book here with the help of like reading the information from here. Okay. Kadima is a trader. He sells on credit only, and during March 2025, the following transactions took place. March 4, what happened? Paid Lee 196 dollar by bank transfer in full settlement of an invoice of $200. Okay, so it means that the total amount which we need to pay to the Lee is 200, but we have paid 196. It means that we have received the discount which is $4. Okay, so let's write it here. So this happened on March 4. We have paid to the Lee and we have paid to the bank, so that's why we will be deducting it from the bank side. Yeah. And the discount which we received, that was $4. Okay. Received payment by check note 291 from the Sophia who had deducted 3% cash discount. Okay. So she is basically your customer and you have allowed her the cash discount which is 3%. And she received a payment 291. Okay. So how much the discount then? 1 second. Let me find out. Okay, so students, as you can see that we received the payment by check, which is $291 from Sophia, who had deducted 3% cash discount. Now we don't know that what is the discount amount which we allowed. So how we can find it out? For example, we can maybe let that original amount before the discount is equal to X. So it means that after giving discount, after giving discount, 3% of discount, Okay, so the business received the 97% of the amount if you will deduct this 3% from the 100. So it means that if this amount is 100%, the original amount was 100%. So if they deduct the 3% discount, so it means that the business received 97% of the amount. Okay, so if after giving 3% of discount, the business received 97% of the amount. 97% of the amount. Okay, so it means that the 0.97, if you just divide this with 100, so 0.97 is basically your original amount. This is X. And if you will multiply this, X is basically your original amount, and the 97% you have received, this is equal to 291, which is the amount after deducting the cash discount. So for finding out the X, we will be writing X here is equal to 291, which the amount after deduction of the discount, and that is divided by the 0.97. Okay, so it means that X is equal to, if you just do this, so X is equal to 300. 291 divided by 0.97 is equal to 300. So it means that if you want to find out the discount is equal to X, means our original amount, minus 91, 291, which we have paid. So the original amount was 300. We just find it out. This is 300. So if you just deduct the 300, 291 from the 300, so the total amount of the discount, which is $9. Okay. So it means that um, we will be writing it here on the debit side. Do we have any opening balance? Let me see. Mm, yeah, there is already written the opening balance in the cash in the bank account. So on 6th March, what happened? We have received the amount from Sufia, and that is discount we allowed to her, that is $9. And the amount which we received in form of cash, that was 291. Okay. Let's see the next entry. Paid motor expenses $26 by cash. Okay. So we will now be writing it on the credit side, and it will happen on 14th March. Motor expenses. Motor expenses, which is $26, and we will be deducting it from the cash column. 26. Okay. Received payment from bank transfer 375 from the MERV, a customer. Okay. So it's really simple. We will be writing it on the debit side. This is 19 March. We received this amount from the MERV. And that's equal to, I guess, 375. One second. Yeah, 375. Okay, done. Next one, paid Mark $240 by online transfer, having directed a 4% cash discount. Okay. So the $240, and we have deducted a 4% of cash discount. 4% of, yeah. So the same thing we have to do here. Okay, students. So we have to do the same thing which we have done here with this as well. As you can see that we paid the mark $240 by online transfer, having deducted the 4% cash discount. Okay, so it means that if the original amount, we don't know what is the original amount after deducting the 4% cash discount, the amount we are getting, this is 240. Okay, we don't know what is the original amount. So if we will get the original amount, so we can easily find out that what is the cash discount we paid, okay, we allowed. Okay. Because we paid Mark 240 by online transfer, having deducted a 4% cash discount. Okay, so we received the discount. So we don't know that what is the amount of that cash discount. We just know the percentage. So if we are paying 240 and we are receiving 4% cash discount, so it means that let's say if we have to pay 100% amount, so the original amount may be 0.96, means 96% of the amount is the original amount which we like supposed to pay. So 0.96 multiply x, we don't know what is that original amount, of course. Whatever the original amount we received, that is 240. And now we need to find out the original amount. So what we will do, this x is the original amount. So we will be dividing the 240 with the 0.96. So the answer which we are getting, that is 250. So 250 is basically the original amount. So if you see that if the 250 is the original amount and we have paid 240, so it means that the $10 of the discount which we have received. So we will be writing it here now. On 22nd, 22 March, we received the money from the mark, and that was 240. We give the money to the mark, which is 240, and we have received the discount, that is 10. We received a $10 of discount to sale. Okay. Okay. Now let's see the next entry. Withdrew 400 cash from the bank for the business use. Okay. So we withdrew the cash from the business use, 400. Okay, so we will be deducting this from the bank on 28th March. So it is like we withdrew this amount. So it means that the $400 debited with the cash. It means that when we withdraw this $400 from the bank account. So it means, why it is not showing here? So when we deducted this $400 from the bank account, so the cash is increased. It is not, why it is not showing here? Because when we deducted this, of course, business, this $400 just came into the business. Okay, I don't know why it is not. Let me just draw this here. This is the $400. Okay, now it's okay. So when we deducted this $400 from the bank, so it means that your debit side of the cash will increase because this $400 is coming into the bank, coming into the business. Okay, but with that, your bank account will be deducted as well with the 400 because you have withdrawn this amount. So we will be writing it here. This is the contra entry basically, 28 and the cash. And it will be deducting from the bank, 400. So cash debited and bank credited. Okay. And here the bank credited and the cash debited. Let's see the next entry. Paid wages $62 in the cash. Okay, so we have paid the wages, so we will simply write on the credit side. This is 30th March, and we have paid the wages, and that is equal to 362, I guess. Okay, done. Next one, paid motor expenses $91 by check. Okay, so we have paid motor expenses. So it happened on, I guess, on 30th March. I think we have paid the wages on 29th March. 1 second. Yes. And 30th March, we have paid the motor expenses. Motor expenses and 91. So 91, we will be deducting this from here. Okay. Okay. So now let's see what is the total of the bank account, and let's calculate 196, 240, 491. So this is equal to 1506. Okay. And the total of the cash side will be 26. And why? Okay, we need to write 362 here. The wages was 362. There is something wrong with the laptop, I guess. Yeah, now it's perfect. Okay. So 26 plus 362. So this will be equal to 450. Yeah. And the discount received is total $14. Okay. And let's write the same thing here. This is $9. Discount allowed. This is $9. 450 and 1506. Now we will be deducting the debit side. So 1560 minus 21 minus 375 and 840. 840 to 91, 375. So the closing balance, 1 second. This side is the heavy side, 840 to 91, 375. This is 51506. Okay. So this side is the heavy side. And 400 plus 50, this is equal to 450. And $9 is like this. Okay, so we need to deduct the credit side now. 1506 minus 196 minus 240 minus 400 minus 91. So the closing balance will be 579. Sorry, my bad. This is the balance CD. Okay, 579 and 450 minus 26 minus 362. So this will be equal 26 minus 362. So this will be 62. Okay. So I guess that's it. Okay. So this will be shifting here. This closing balance is on the 31st March at the end of the date, and it will shift in the new month, that is April 1st. So this is balance PD. 62 and then 579. Okay. So just done with that. Okay, Kadima has received a bank statement dated 31st March 25. The bank statement shows the check for motor expenses had not been presented to the bank. The amount received from Merv was 357, and Kadima has checked his records and found that the amount shown on the bank statement is the correct amount. Calculate the amount of for the bank balance which Kadima would show in the statement of financial position at 31st March 2027. Okay. So what was the cash bank balance? We have the cash bank balance that was 579. Okay. So cash book balance will be cash book balance is equal to 579. Okay. And the check for the motor expenses had not yet been presented to the bank. Okay. So once again, let's see. The check for motor expenses had not yet been presented to the bank. And how much it is? One second. Let me see from here. Motor expenses. Okay, so the motor expenses is equal to $26. Students, basically these motor expenses, which is $26 we have paid by cash, it is not relevant to the bank because this is what we have paid by cash. So that's why we will not be writing like if we already because we already deducted this from the cash book. That's why we will not be deducting it again to find out the balance which we have to show in the uh like in the statement of financial position because we already deducted that. This amount which we got 579, this is the amount which we get after deducting this motor expense. That's why we will not do anything here. The amount received from Mer was 357. Kadima has checked his records and found that the amount shown on the bank statement is the correct amount. Okay, so if you see that amount which we received from the MERV here, where is the MERV? Yeah, this one. Receive payment by bank transfer 375. Okay, but when she saw the bank statement, so they are saying that the 357 we got, but we recorded it like 375 here. But the right amount was 357 when she checked. So it means that the we overstated the bank balance. That's why we will be deducting the difference between 357 of and 375 from here. So if this is a basically you can say that the cash book error because we have recorded this as a wrong amount. Cash book error. So if you will see this is 375 minus 357. 375 minus 375 minus 357. So this is equal to yeah. This is equal to $18 and we need to deduct this $18. Okay, so 579 minus $18. So revised cash book balance is 561. Okay, 561. Then we have the next question. Advise. Kalima is considering stopping using cash and checks in his business. All payments would be made directly from the bank account, and all customers would be required to pay by bank transfer. He would allow cash discount of 5% for all payments received within 30 days of the invoice. Advise whether or not he should make the above changes. Justify your answer by providing points for and against making these changes. Okay. So for requiring bank transfer and increased cash discount. So first of all, money is usually safer in the bank, so then being held in cash should be reducing the risk of theft or fraud. However, increased cash discount allowed would reduce the profitability for the business. And again, like the benefit, we can say that money is usually safer and no need to visit a bank to pay in the checks. However, maybe not all customers may have the bank account. So at the end, you will be giving any recommendation what they should do with the positive point or negative, whatever you want to say. Oh yeah, positive point. Okay, so this is it, students. We just completed the whole paper. Alhamdulillah, that was very, very long, and that's why I was not making the video on that. The reason is that because it's really, it will take a lot of time to solve the whole paper. So that's why most of the time I use not to solve this, the O levels accounting paper. Okay, but inshallah, from now onwards, inshallah, in the next video, I'll be solving the paper one. And yeah, Allah Hafiz.